Hi, everyone. This is Rob Roy of Elliott Options, and welcome to this week's TradeFinder Live. For those of you that are new, let me give you a little bit of an idea of how this works. First of all, we start off with this disclosure. The way the process works is we start off with disclosure. Let me give you a couple of key points that is important for you to know. When we talk about pricing, unless noted otherwise, we're referring to US dollars. We've got a lot of international subscribers. We have a lot of international viewers. The other thing that's really important to note is that we are not registered to give individual investment advice in the United States. So those are the two key things. So the way the process of TradeFinder works is that we go through and we show market, talk a little bit about that. Really important day today. So certainly some things to discuss regarding the market today. Then we'll talk about any case studies that we may have closed, alerts for our subscribers, and give you an idea of how that process works. We had a nice winner that we closed out for our subscribers since last time you were here. In fact, we've had a pretty doggone good start to the year, if I do say so myself. And then we'll go through and review some of the case study considerations that we've talked about here in TradeFinder, because during TradeFinder, we just identify case study considerations and then you're left on your own. What our alert subscribers enjoy is we actually send them out alerts in addition to really good education, communication, etc. Alerts on when to enter, when to get out, any adjustments along the way, etc. So you're actually sent alerts along those rather than being left to forge on your own. So that's the big difference. So we'll show that to you again. Then we'll go through the past case study considerations. And I've got something new to look for in our search for a case study consideration for tonight. So I think that's something that you might enjoy. We've had a little bit of conversation about this and see if we can't find something that looks good. And as weird as the market was, we'll just go ahead and move into the market. As weird as the market was today, there's actually a decent number of bullish results on both searches, the one I'm going to show you tonight and the one that you're used to us looking at each and every week. So we should be able to find something pretty decent, I think, to go along with what likely to happen moving forward. Now, when we went into December, well, let's take a look at this real quick. In December, when we talked about how we were setting ourselves up with a lot of strangles because we felt that the market was getting ready to get volatile. And at the beginning of the year, there was going to be more volatility. And look, that's exactly what happened. So there's December where things were quiet. And then we moved into the beginning of the year, which was an expanding triangle formation. So volatility returned, it came back. We've closed out a good amount of those strangles. We actually don't have that many left. And so we've had this big move here, but look where we are. We're in the widest part of the mouth of this expanding triangle, which means the volatility is not likely to go away anytime soon. I think things actually are getting ready to be likely more volatile than they were in January, which means if you're viewing this for the first time or you've been viewing it for a while and you haven't subscribed to our alert service yet, now is a great time to do it. I think going into March and April are times when we're going to see some pretty decent movement in the markets, and then you set yourself up for what normally happens around May, which is more volatility. So I just think we're coming into a period over the next few weeks that's going to be, our next few months, I should say, that's going to be fantastic. So really good time to consider our alert service if you haven't done that already. So there's an example of exactly what I was talking about back in December. And you can clearly see the shape of that expanding triangle. Some people call that like a megaphone, you know, like cheerleaders use, etc. And I'm kind of cheering on the market at this point in time. Now, one of the things that we've talked to our subscribers about quite a bit is that at some point in time, we're going to have a downtrend in the market. And I don't mean just a short-term correction. I'm not talking about just these little blips here and there and maybe even today. I'm talking about a downturn that occurs in the market. And that's when things get really fun. And I say that because the market moves so fast, alerts are flying out. We've actually had a little bit of a period here after having a fantastic January where things have been a little more quiet on the alert front, but that's by design because there wasn't a whole lot going on. But now things are starting to move again. And so you're going to see a lot more alerts coming out. So again, we're getting ready to ramp that up. We had a lot of positions on, we pared them way down, and now we're getting ready to load back up again for this period that I think is going to be a lot of fun. I don't necessarily think that this is that where the market starts to make a downtrend, but once we do, it's going to be great. And I think the reason I'm going through this is people that have heard me say that might have been wondering, yeah, you know, we've had a couple down days and we had this big down day today. Is that what's happening now? I don't think so. And here's why. Let's go back. I know you're tired of seeing it and I'm tired of drawing it, but it's just how important that Elliott wave has been and showing you this zigzag pattern that we had where we ran up to the 100% level and then we never tested the 61.8. That was a test of 78.6. To me, that just doesn't count in the equity world. Some other people may disagree with me. If we were trading currencies, I would say that was all we needed. But then we moved to the upside and look where we moved to the downside today. We tested that same 381 level. So we came down, tested that on the low, and then traded back up and closed almost on the highs. It's a big reversal day that occurred today. You want to see if it's on volume, and it was. So look at the fact that we had well above average volume. For those of you that may be new, that red line is the 200-day moving average. Now note how that had sloped off, and I think it's getting ready to start to slope back to the upside again. As far as volume, maybe this lower volume played into some of the volatility. We'll wait and see how the next couple of months go from a volume standpoint. But all we did was test that 100% extension today and close back to the upside. Obviously, we want to see where the 10-day moving average is, and we didn't recover that. So to feel like that was only a test, this is test, just, you know, the old TV thing. This is a test and only a test. Those of you that are as old as me can remember when that used to come on the TV all the time. But we'll find out if that indeed is only testing that 100% extension or if we are getting ready to come down again. But right now, we're right at the 10-day moving average. It's an interesting day, isn't it? So the low tested the 100% extension, the high right on the 10-day moving average. And then we closed just below the 10-day moving average. Tomorrow is going to tell a lot. Right now, the futures are up 5, so it's not really telling us a whole lot. So if we break above that 10-day moving average tomorrow, then that could be it. We could be looking at an upside breakout out of that expanding triangle, the megaphone looking thing that I was showing you, and off to that 161.8% level. Or, pardon me, if we break this level, then it's easy to see where we're coming next, and that's going to be 61.8% level. So either way, there's a lot of trading opportunities to be had when we find out what gets confirmed. So does this reversal day get confirmed and we break back to the upside tomorrow with a close above the 10-day moving average? Or do we come back again and try that 381 and break below it? Then it's a quick move back down here to that 358 level. So it's going to be pretty interesting next couple of weeks to see which one of those two wins. On the fundamental front, we had Chairman Powell that came out today. Now, whether it was coincidental or not, right around the low of the day, I tend to think he was a bit more technical. You probably hear some commentary on the financial networks that he's the one that reversed things because he mentioned that you're not worried about interest rates, et cetera. He's worried about unemployment and getting the jobs numbers back up, and the Fed is going to stay the course. And, you know, they are not concerned with anything else that's going on other than jobs as their main focus, getting back to the employment levels that we had before. In other words, they're going to keep the pedal to the metal as far as raising rates. Now, you may have noticed that a lot of the tech stocks have sold off with this rise in interest rates, and people think, well, valuations, if interest rates start to go up, makes it a little tougher to justify those high valuations of some of those big tech stocks. But if the Federal Reserve is going to keep pumping in the liquidity, and I think a consideration would be they may want to bring those rates down a bit, then you could see in other words, inject even more liquidity than they are now. And we still don't have the stimulus package from Congress yet. So we don't know what that's going to be. Those two factors are still out there, which could certainly be enough to propel the market up to that 161.8% level. And let's say the package is disappointing, that it doesn't come out as big as people thought. And maybe the Federal Reserve doesn't buy on bonds and treasuries to bring rates down just a little bit. Because remember, with bonds, it's inverse, right? As prices go up, yields and rates come down. So if you're wondering, well, where has the money been going? The pairing of the US dollar is where a lot of the money from the bond market has been going, because those movements have been pretty dramatic. I think that move may have played itself out, and you may see some money move back into bonds. We'll see. But again, I've said this numerous times. Our subscribers have heard it till they're blue in the face, I'm sure, is the fact that you have to have some sort of a working knowledge of the bond market if you're going to be an equities trader, because the bond market is so important to the equities trader, so to the equities market. And so you really need to understand those relationships. So watch that on a daily basis, just as much as I'm watching the equities market. So staying on top of those. But there's the key things. There's what I wanted to show you today, was that we tested that 100% extension on the low, hit the 10-day moving average on the high, closed just below it, actually even eking out a gain on the day after a really ugly open to the market. Rest of the week even is going to tell a lot, but tomorrow will be a day to certainly pay attention to. So last thing on how this process works for those of you that are new. I see some questions popping in, and go ahead and ask your questions as we go through the process, but I won't answer them till the very end. And the reason for that is just, it interrupts the flow, and I lose my train of thought, which happens pretty easily as you get older, I find out. But the questions will come at the end. One of the favored segments is at the very end. People will send in their favorite stock symbol, and we'll look at it based on our indicators. I'm not going to give you individual investment advice on a trade, but we can show you what our indicators look like, what the charts look like on your favorite symbols. So all those things will happen at the end. So continue to ask your questions as they come up throughout the course of this, but just please understand, I'm not ignoring you. Well, I guess in a way, I'm not ignoring you. It's just the questions will come at the very end. So just wanted to make sure that everybody was aware of that. All right, so that's the market. Now, the next thing I wanted to show you is an alert that we had closed for our subscribers since the last time we got together, and that was on the XLF. As you can see, we entered this back on February 11th. Now, the reason for entry here is quite interesting. There's a couple of things here that I think you'll find interesting. First of all, we had a really nice zigzag pattern with a 61.8% extension there, just under the 33 level, and a potential 100% extension all the way up to 35, which would have been in the top of the tap box. So this is what I really like when we have a zigzag pattern that's encompassed within some part of the wave 3. So the wave 4 actually was the B correction of the zigzag pattern. That's fantastic. It's one of my favorite setups. By the way, I'll ask the guys, maybe they can do this on the fly. If I put the link in there for a web series that we have coming up, it's almost full. And I know that sounds like BS, but it's not. I'm not BSing you. It really is almost full. We're almost to the limit of the capacity that we have for our internet service provider for the webinar. But zigzag mastery class is coming up, which is my favorite directional trade. And I like to see zigzags when they encompass the wave 3. Everyone that's familiar with Elliott wave has heard of the wave 5 pattern followed by a 3-wave correction. That's the thing that's marketed and published a lot, but it's so much more intricate than that. In fact, Elliott talked about the corrective patterns, flat zigzags and triangles, as being even more accurate than the 5-wave pattern. I really like the 3-wave zigzag for 2 main reasons. One, it's 3 waves, so it's not as long, easier to find entry points. And then the second thing is the fact that you can do that in the wave 3. When a lot of people teach stay away from the wave 3 because you don't know when it's going to end. Well, you do when you have a zigzag in there. So that's the key. So we're going to go deep into that in this class, Zigzag Mastery. So if you'd like to sign up for it, hopefully the link will be in your chat box. Kind of catching them off guard there, but we'll see if they can put that in there for you. And sure like to have you in that class. I promise you, if nothing else, I'll be passionate during that because I like it so much. A favorite directional pattern. So that's where we were with the XLF. Now, the second thing that I wanted to mention as far as the XLF is this actually wasn't one that came up on the search. The search that I utilize, which we've done in the past, so if you've been here, you've seen them in the past, had 5 out of 7 results were financial stocks. And in running through the financial stocks, just simply couldn't find. There were some great patterns, but simply couldn't find one that was similar or a good options trade. And in we have what we call a new subscriber call for those of you that become new, and even for our existing subscribers, if they choose to, we have, and it's not just a call, hey, welcome, we do that as well, but this is actually a webinar where we go through and talk to you about the process of how we trade at Elliott Wave Options. That's what's known by the new subscriber call. And in there, it talks about how option trading is part technical analysis, part options analysis. The option analysis is just as important as the technical analysis is, because you can find the greatest pattern in the world, but if you can't find an options trade, what difference does it make? So you have to have the ability through liquidity, deltas, all kinds of different aspects of the options. Implied volatility is a big one to put on a quality option trade against a pattern that you like. Well, the reason I'm talking about that now is that there weren't any. Out of 5, there were none that had good options. They were either thinly traded, or the spreads were super wide, or the strikes didn't work. They didn't have the right deltas. Just there wasn't able, out of 5 of them, believe it or not, there wasn't the ability to create a good options trade on any of those 5 results. So what's the next step? Well, if you have that many stocks from one sector that are showing up in your search, go to that ETF, which is what we did. So I said, okay, well, we can't find an individual option trade on an individual stock, so let's just do the ETF, which we know is super liquid, right? The XLF is very liquid. And so that's where that alert came from for our subscribers. Even though the XLF itself didn't show up in the search result, many stocks that are within the XLF did. So it was a good time for financials, and you can see it worked really well. We got up to the bottom. Now, we didn't quite reach that price target. Well, why did we close it out then? Well, there's such a thing as a profit target. So you have, just like an option trade is part technical analysis, part options analysis. When you have a trade, you also have a price point from the chart, but you also have a profit target in mind. Now, the XLF, you can see it was trading in the 30s. It's not the greatest mover in the world historically. It's kind of a sloth. Normally moves pretty slow, but it moved rather quickly to the upside, and we were able to generate a 100% gain in 8 days. And so generating, when you have 100%, when basically in a week on an ETF like the XLF, that's not historically a big volatile mover, you take that. Now, whether or not it could have continued higher, whether or not we hit those targets, we might. And we're still watching this. We still watch all of our alerts once we close them out to see other entries when things have worked. But the fact that it can return 100% in just over a week, I talked about this before, the market looks at you as being greedy if you don't take that, and kind of wants to come back and let you know that maybe you should be a little more prudent in your exits. So looking at this, I've shown you many mark-to-market graphs. This is one of the things that we do for transparency. At Elliott Wave Options, we show you every single trade, every single day, where it is. We don't hide anything. So it's all right there in front of you. And we talk often about how, because we're buyers of options, trades tend to go to the downside as far as profit loss until the desired breakout is made. So the trades will realize a loss before we get the move. Now, that's whether it's breaking out of a triangle in the volatility strategy or a directional move in the impulse strategy. It's just the nature of buying options, but we're willing to do that because you limit your risk. So the great thing is that you have limited risk. Time decay can become an issue. Very few mark-to-market graphs look like this. We wish they all did, where it just takes off and it's profitable from day one. That isn't how it usually works, but it sure is fun when it does. Usually you realize that you have unrealized losses until that breakout occurs. But this one was one, and that's why I wanted to show you this, that this position was never losing, not even day one. So right after putting it on, it actually started showing a gain on the position. So that was a really good alert that we sent out, and we'll keep watching the financials. And a lot will have to do with how interest rates are going. As long as interest rates stay up, which I do think the Fed may target those, even though they may not voice it or verbalize it behind the scenes. I think they may want to try to bring things down a little bit. But as long as rates stay up, financials are a good place to be because they have the opportunity to make greater profits. That spread between the 210 spread that you've seen on the SPY market updates that we do. All right, so now let's go ahead and catch up to date on the case study considerations from the previous weeks. And going back here, we'll look at big lots. And this was where we were back on the 9th. And so sitting here with this doji that we had on the 9th, and here's where we are today, moving to the upside, choppy to the upside. By the way, I think that's what's going to happen in the market. So even though I think because we're in the widest part of that megaphone, I think this movement is going to be choppy. You saw the beginning of that move over the previous week or so. We had little tiny bars. I don't think we're going to see that much anymore. I think we're going to have a chop, whether it's a chop move to the upside or a choppy move to the downside. I think there's going to be back and forth. So you kind of got to be on your toes and knowing what you're doing when you have a choppy market like that. It's easy when it's just straight directionally one way or the other. And you've heard me talk many times how I really like the 45-degree angle. I don't know that that's how it's going to play out. I think it's going to look similar to this, which is what brought it up. See, it's moved to the upside, but see how choppy it's been? Pretty good intraday bars. Overall, it's moved up since we entered, but in a choppy manner. And then look at this one, talking about the financials. This was the other one that we looked at on the 9th, PFG. So here's where we were setting up there, and look at that, blast off to the upside. If you are following along with this one and you followed it and you haven't closed it out yet, I know what you're waiting on. So then last week we looked at Walmart, and I have to admit that, you look at Walmart and think, well, can that really move that much? Well, yeah, it can. That one was a strangle that we looked at for a case study consideration, and it made a pretty significant move to the downside. Now it's at support right down here around 35, but this was on their earnings report that came out and moved lower. So that was a pretty significant break in Walmart, back to a lot bigger move than you might expect out of a stock like Walmart. So those are just over the past couple of weeks, the case study considerations that we've looked at. So what are we going to find this week? Well, I mentioned in the beginning we're going to look at something a bit different. And we've, or at least I've been talking to anyone that would listen to me to be really careful about getting involved in that momentum, low dollar, short squeeze stuff. You've heard about it, the chat rooms on Reddit and the whole Robinhood thing. And, you know, they were GameStop, AMC. You've heard all that stuff over and over again. But it brought up an interesting thought where, all right, well, if that's the interest, and there's a valid point to it on where has the action been. So let's take a look at the Russell. Now this is different, small caps, but the Russell's had a pretty decent run here since the beginning of the year. We talked about the January effect on one of the SPY recordings on YouTube, that one of the aspects of the January effect is small caps outperforming, and they have this year. Certainly outperformed big tech by a long shot. And then you have all of this phenomenon of people wanting to catch that. And you know, it's greed, right? People trying to catch those big moves on those low dollar stocks. It goes back to Wolf of Wall Street days. It really does. It's the same type of thing. Not quite penny stocks, but not that far away, where they're trying to create these short squeezes. They're not able to do that on their own. They needed the assistance of hedge funds to do that. I don't think the hedge funds are going to play in that business anymore because there's too much regulatory scrutiny about that whole thing now. You know, they've been in front of Congress, the CEO of Robinhood and all that kind of stuff. I just don't think they're going to mess with that anymore. So I really think that phenomenon is going to die down. But if there is a thirst out there, if there's a desire through our subscriber base for finding some of these lower dollar momentum type stocks, then we can create a search for that. This program that I utilize, and people talk about this all the time because the charts are so clean, is called Profit Source. So if you're not familiar with it, you can find out more information at profitsource.com, just the way it sounds, profitsource.com. One of the cool things about it, in addition to being, in my opinion, the best Elliott Wave software out there, you can program your own searches. So what I did was I created a set of indicators, and now I'm not going to show them to you. We're actually having the guys at Profit Source agreed to program this in as a pre-computed search for our subscribers. So if you're an Elliott Wave option subscriber and you have Profit Source, you're going to have this hopefully this week. No guarantees, but it was my understanding in a conversation earlier today that they're awfully close to being ready to release that for our subscribers. But what this is this is a search for finding those lower dollar stocks, but with good technical patterns and companies that are backed by decent fundamentals. So you can check both of those. And so we can look at doing this responsibly. In other words, trying to find lower dollar, higher momentum type trades without trying to create short squeezes in companies that are in deep financial trouble, you know, not fundamentally sound, and trying to catch those, you know, 1 in a million type of moves. If you do happen to catch one of those, congratulations. Please just don't be greedy. Be smart. If you get one of those moves, take it and go. But it just created a thought process in my mind of, well, why can't we create something along those lines, but do it a bit more responsibly? And that's where this search came from. So we're calling it the Momentum Search. And again, it'll be available soon. So let's look through this list here and see. And as with every time I talk to you guys in TradeFinder or with our subscribers on Thursday nights, we have a webinar that we have just for our subscribers every single Thursday night. I don't pre-look at things. Just don't think it gives the same vibe if I've already gone through and pre-programmed stuff. So I don't do that. We look at things together and I talk it out. Hopefully that doesn't get boring to you, but I just talk out the thought process. This is what I do all day long. Just looking at these results and going through and analyzing them and trying to find if there's any trading opportunity. So just click on the first one and we'll go from there. So let's take the CCI off. And you can see here the DMI is still under 30. It's between the ADX. We got a nice, like a double zigzag here. Real estate bull, man, really? I don't know if this ETF is. All right, now see there, it didn't quite make it, but that was close to a test to the 61.8% level, a lot closer than the market came, which is what I'm talking about. And we closed above that 100% extension. Look where the 161.8% extension is. Absolutely dead smack where the wave 5 forecast is in the tap box. So it looks like this one wants to run up towards that 16.5, 17 level. So again, note that it's not a high dollar stock. So that's by design. I don't know. This is very optional. It is an ETF. It is. It's not super liquid. Out to May is decent. Spreads are a tiny bit wide, not ultra wide. So that's actually a candidate. So I'm just going to leave that one on the screen. Now, what you can do here is you can just click this arrow and go to the next one, but then it will replace this one with the next one. That makes it easy as you're going through the process of, if you create your own search, which you can, you don't have to use mine, you can create your own, and you go through it and you just click, click, click. And if you don't see a pattern you like, click to the next one. And then it doesn't waste space on your screen for it. But when you want to keep one, then it'll come back up here and then just re-click on the next one. So it saves that one. And see, the interesting thing for me about this is it brings up a whole bunch of stocks that I'm not familiar with. But look at this. Look at that DMI. It can't look much better than that. So I'm just going to have to go through with you here and work through this and see what the liquidity looks like. Because again, the odds are that I'm going to find a whole bunch of stuff that I'm just not familiar with. There's massive liquidity here. And the options are cheap and the spreads aren't that wide. You can go out to May. There's obviously a spread there because the contracts are too close to the same. So somebody created a bullish spread there out into May, expecting it to be above 7.5 at May expiration. That's the trade they put on. So that's where does our target happen to be? So somebody else is looking at exactly what we're looking at. And look at the time, May expiration. I wonder if an institution is using profit source. That's uncanny that they have the exact trade on that we're showing here on the screen. So that looks awfully good too. And the options are so cheap, you could do an absolute ton of contracts on that one. So I'm going to leave that one too as a consideration. Man, that's just, look at this whole scenario there with that 45-degree angle look, he's trying to say, right into that wave 5 high. That's pretty impressive. That looks really good. All right. So do you see what I mean about this search? But we're going through and we're looking at this. I haven't talked about, oh, the short interest is this and we can squeeze them out. We're not talking about any of that stuff. We're just sticking to general technicals. First of Long Island, I'm guessing this is likely some sort of a financial. It sounds like a bank. I don't know that, but it just sounds like it from the name. Target's up around 22. It tried to make a run today and it couldn't hold it. So the DMI looks good, but makes you wonder why couldn't it hold that? Because the market did make a pretty decent reversal today. Maybe it's just testing this high. I think I would want to see some, even though the DMI looks fantastic, but if you noted, the CCI is pretty high. Well, actually, I should take that back because there's a couple of really high peaks back here. And so there's a little more room. The CCI, if you're not interested or not familiar with that indicator, historical performance is really big on that. We have an educational series on our website called TradeScan, which goes through these individual indicators that I like to utilize, and it talks about them. You can learn a whole lot more about the indicators, but one of the key things with the CCI is you go back and you look historically, it has this scale to the right, but it matters where is it in conjunction with where the peaks and valleys have been on the CCI on these individual stocks over time. So that actually does show. And at first blush, it looked like maybe it was to the high side here, and we were about an area where it would look to reverse. But that's just since November. If you go back to August, you can see that there is more room to the upside there. But I don't think I would want to put this one on the, let's consider doing this week because of that. It had the opposite reversal of what the market did today. So with that one, we'll just leave that one to see what happens tomorrow. Same thing here, LCMB. I mean, it sounds like almost the exact same thing. Another one that really tried to move today and couldn't hold it. Also, I mean, this is almost the identical chart to the last one. Also an outstanding looking, I mean, look at the DMI. Look at the separation between these two directional indicators. They're vertical. And the ADX is crossing them, and it looks really, really good. But you have to wonder, I mean, it did finish, up 1%, but why couldn't it hold more of that big move today? So I guess what I'm trying to say is out of those two, I would like to see a little more follow through tomorrow. So, I mean, if we were doing this later in the week, then both of these could be considerations, but not for tonight. Tomorrow's close becomes very important to those. Luxfer, another one that's early in the game with the DMI here. The ADX hasn't crossed above 20 yet. So I do the same thing here that I utilize in my regular searches, is the fact that I'll put the parameters below 20 to try to catch when the ADX breaks right through 20. And you can put it on a watch list. And that's what we'll do with this one as well. So the trigger is when the ADX breaks through 20. But prior to that, it kind of becomes a watch list. But this one also has that look to it, doesn't it? I mean, it's just made a nice churning move here with a potential target up around 21. So a couple points higher. This one is a little bit better, a little easier to understand this one than the last one because it started to get a bit overbought because it had a good day yesterday. Had a big move yesterday, opened, gapped up above yesterday's high, not even the close, traded higher, and then just kind of ran out of steam. That makes a lot more sense. It just got overbought. So you can see from the separation with the 10-day moving average, it just got a little overbought at the high and pulled back. Still would like to see that ADX cross above 20. So this is another one that would wait and see if there's confirmation tomorrow on it. I'm looking at the options and it's not even worth considering. You can forget that one. There's absolutely no, I don't even know why they have options on it. There's no open interest. None, not a contract. Oh, there's a couple on the put side. 4 contracts on the call side in April. That's it. 4 of all the strikes that are available. There's 4 contracts. So nobody cares about this stock as far as the options are concerned. So that's not going to be helpful. Manchester United, any footballers out there? Kind of interesting to see this one on here. Not American football, obviously, what I was talking about. Look at that. So pretty good resistance that it just broke above and confirmed today. Now here's the issue, right? This is where it gets tricky. You need that confirmation day, the second day, when you break a major point of support resistance, major moving average, break out of a triangle, all the things that we talk about. And so we got the follow through day today, but now we're a tiny bit overbought. So it would be kind of cool if it sat here for a day or two. It may not. It may take off and run from here. There's where the CCI peaks are. So it's got some room to go there. The DMI at ADX is well above 20. That looks good. And so we're trading at 17. You know, it's got another $1 to go there. With options and the cheap options, you might be able to do something there. Some of you might just, international people might be just happy with the fact that the stock's on it. It's not very liquid though. You can go out to June and little width on the spread, 40 cents wide on the June 18 strikes, which for a $17 stock is pretty wide. Maybe it tightens up throughout the trading day tomorrow. You've heard me talk about that. Sometimes they widen spreads, especially when you have a bit of volatility like this has had the past 2 days. Look at that triangle preceding it. Remember we talked about how Elliott talks about smaller triangles that people just don't focus on, but they matter. Well, there's one right there, and then boom, there's your breakout from it. So it doesn't look like it's one that wants to continue, but it's not outpacing the other ones that we looked at. This one, the DMI is getting a little high. So it looks like this move is getting just a bit long in the tooth. Not so much from the CCI, but that the DMI looks like the DMI looks like it might be a bit overbought. The CCI is still good. So look at this one. This is a $5 stock with a move up to 6.5 potentially. This looks good right through here. Really nice consolidation right there on top of 5. Let's see if there was volume. Let's see if any institutions got into it. Not as much as you would like to see. I mean, volume's tailed off a little bit. That's normal with consolidation, but you also wanted to see some volume step in with it breaking off that 5 level and a touch above average. But look at the volume drop off through here though, and you kind of want to see that turn around a bit more. So I haven't been really familiar with any of these, but there's spreads again are a little wide, but there's at least some liquidity in this one. Numerous strikes have options that are trading on it, so it's not totally a ghost stock out there. That's what I call them when they don't have any options. But moving sideways here and getting ready to move to the upside, that looks pretty good. I have no idea what this is. Some sort of index. Look at that wave 3 move though. The ADX has just stayed overbought since September of last year. It's just like a wave in the ocean. Look at that Elliott wave, and some volume is starting to come in here. Above average volume over the past few trading days. We'll see what the CCI looks like here. It's also just kind of swimming at the surface there, isn't it? Here's the recent peak highs. Give it just a little more. So a little bit of room there. And the potential target's up around 8. So this is a slow mover. I don't think the options are going to be super interesting on this, but I could be wrong. It's Swedish Export Credit Corp, whatever that is. And 25-cent wide spreads, 70-cent ask, 190 contracts out in June. I think it could be worse. So I would put that one maybe in third place as far as the ones that we've looked at. And then Western New England, I'm guessing this is probably another financial. That's more like what you would want to see. It's breakout, So here was our little triangle, almost a launch pad effect there. Here's something I wanted to show you. We're so used to the launch pad effect being upward breakouts with the blast offs, but I've mentioned that you can go down too. So if we ever do get, I'm just being facetious, when we do get into a market downtrending pattern, you'll see this kind of a scenario too, where you have the sideways consolidation, which is the launch pad, and they call that a rocket that blew up on the pad or whatever, but you can get the blast off move can be in either direction. It doesn't always have to be to the upside. But we had a nice little triangle here, kind of a semi launch pad thing. It's broken to the upside. Nice. That one actually looks pretty good too. But let's see if there's any options here. So no options. Spreads are way too wide, not a consideration. So that's the process. You go through all that stuff and you don't find them. So now we're back to the top of the list. And so we had our two choices. We have this one, DRN, and this enable midstream partners. And go back, I forget which one was the one that really liked. I think it was this one, wasn't it? With that spread, yeah, going out to May. So let's try this as our case study consideration for TradeFinder. Again, it's something new that I created for our subscribers. So let's put it in play here. So for 223, ENBL is going to be our case study consideration for this week. And we'll keep an eye on it for next week and see if it goes up and satisfies that target price up at 7.5. Tight spread, lots of options, good delta. Move up there could work out nicely. Solid looking DMI. So just for something different. First time we've done anything like this, and all the time we've been doing TradeFinder. So let's try it out and give you a taste of it. I can tell you our subscribers are itching to get this scan available for them. So we'll see how that plays out. All right, that's what I wanted to talk to you about. I ran a little bit longer than I wanted to, so let's quickly go into your questions and any symbols that you wanted to look at. Greg, QQQ, and Workhorse. Workhorse got cut in half today. My chart says that earnings are going to be on 3/1. So I don't know. Was that the news today? Is that what came out? Was it an earnings report? What happened that caused it to get cut in half? Workhorse stock gets crushed as the United States Postal Service drops a bombshell. Okay, so they awarded a contract to Oshkosh. I saw Oshkosh was up today, so now I know why. So those two are tied together. So they awarded it, and basically Workhorse dropped 47%. So, boy, that's going to be tough to come back from. You lose a contract like the United States Postal Service. So we'll look at the chart, but that would be a great put calendar spread. Following that big drop. But here's the Qs, and charts are pretty similar to where we are with the S&P. Not as great a looking zigzag pattern. In fact, that's got to be too big of a correction there to count. When you look at that. Yeah, see, so that's a disqualified zigzag. The correction was too much. So basically we go back to moving averages. We're in the wave 3, and we've got support right here, which is where it opened, traded below it, close back above it. Qs are just a little bit oversold from the 10-day moving average, but they're going to have to get back up above this area right through here. So the Qs have a little more work to do than the SPY does in order to feel like we could be getting ready to move to the upside. But there is a gap right there that needs to be filled. So we could at least come up and fill that gap and then see where things go from there. But workhorse, this is going to be an ugly chart. And there's your cut in half. It did, you know, this is just a fantastic put calendar spread, the 15 strike, because the volatility has to be astronomical following that drop today. If you wonder what I'm talking about, I have a strategy. We're working on this behind the scenes as well for another product for our subscribers. Is when you have a stock that has a big drop, spikes in volatility. So you want to sell that volatility, but we don't sell options because we want fixed limited risk. Well, how can you do both? Well, if you buy and sell the same strike, but different months, a time spread or a calendar spread, you still can have the ability of selling an option, bringing that premium in, but without having the risk of a credit spread or selling a naked option. So what I look for is stocks that have had big drops, because then they just tend to flatline. Just, you know, like on a heart monitor, you know, when flatlines, that's the stock just goes sideways like this right here. And this is a great candidate for that. So I'm actually going to keep an eye on that from that standpoint to show our subscribers. So pretty cool stuff. Poncash, JETS, Jets. No, it's moving like a jet, isn't it? Whew, there we are, though. Here's the problem with Poncash. Great move. It's a tiny bit vertical for me, so you knew I was going to say that, right? So it started here and then went this way. So a little vertical right at the wave 5 high. But man, that could very well be an extended wave 5 because that DMI looks fantastic. And the CCI is not too high either. See if it needs it might, I don't know. The low wasn't that far away from the 10-day moving average. Maybe this is just getting ready to go. Even if someone were to put something on here and maybe it pulled back a day or two or just rested a day or two, could be an opportunity to maybe add. I don't know. That looks awfully good. Just a little concerned about that vertical move that I'm going to keep an eye on this one too. Just the vertical move over the last 2 days makes me, in the last 3 days, a little slightly nervous, but when I say that, what I like to see, so that would be a natural thought, right? Well, if that makes you nervous, what would make you feel better? A little consolidation. Same thing that's been happening with Bitcoin, right? It just went too vertical. It needed to rest. And so it is. Now it's bouncing around that wave 5 high. It's resting. Backing and filling is, you know, it's not when it just doesn't rest sideways. That's called backing and filling, when it goes and drops down and comes back up and moves around. That's the definition of it, the current chart of Bitcoin. So that's what's happening there. CLSK. Clean spark. Rough day today, but a 50% correction. The positive here would be on the low of the day, or excuse me, on the close of the day, it held these lows from back here in January. So we opened here, we traded lower, right at a 50% corrective move. So that's obviously understandable. And the fact that it was able to close back above that line around 25, it's got that gap there that needs to be filled. A little below its 10-day moving average. So obviously this took a little steam out of it, but it could gather itself and try again. It had gotten overbought on that wave 3 high. And these next two moves here, right here on these two highs, just didn't generate much out of the ADX. It was kind of like, that's our run. And this whole process here could be viewed as consolidation for possibly another run higher. Snap, Rowena. Well, that's the definition of an outside day right there. You heard me talk about inside and outside days. In general terms, an outside day is when the low of the day, the low of the current day, is lower than the low of the previous day. And the high of the current day is higher than the high of the previous day. So that's an outside day, meaning the high was higher than yesterday's high and the low was lower than yesterday's low. Normally when you see that, it means it's getting ready to do something, but man, it did a lot today. So what's it going to do to follow up with that tomorrow? I don't know. Didn't like that positive directional indicator just throwing in the towel with where it closed. So tomorrow is really important to see can it hold this and start to build on it. If it does, then that DMI could re-engage and show that the momentum is back. But that massive outside day could also mean we're tired for a while. There's our blast off the launchpad effect. Oracle. Wow, that's a blast from the past. Tech Days used to trade this every week. Doji today after a big move yesterday. I know a lot of these stocks are coming into earnings, so I'm not pulling up the options to find out exactly when the earnings reports are, but right up here against that resistance area, tiny bit overbought. Probably going to have a hard time pushing through that 66 level over the next week or so, I would think. But the DMI is trying to set up. It's not there yet. The ADX hasn't broken above 20, so wait and see, let it get there. But it's showing like it has some momentum behind it. Maybe a zigzag there. Just barely staying under the threshold, but it hit the 100% extension today. So there's another thing that is causing it to maybe need to rest a little bit. I think Oracle needs to just chill out for a bit. Then the XLE, that's a good one to look at. The energy sector just continues to do well. And the DMI looks like it's not done yet. Doji today though, so we'll see how that plays out tomorrow. If it needs to rest or if it's going to take off. Something's going to happen tomorrow though, because you had a decent update yesterday, a bit of a follow through today with a Doji, some room out of the CCI, and tomorrow the XLE. So energy is going to have an interesting day tomorrow. You can't say whether it's going to be to the upside or the downside, but looks like it wants to do something. NEO, some of these we'll look at Thursday night. You can see that it opened down here, right down in this area of support that it needs to hold. And so far today, it held it to the wave 3 there. Still only a 34, so call it the 38% corrective level. So now we're down, testing that level. 10-day moving average, we're oversold at this point. Now it's created a bit of a ceiling here though at 60. So when it was trying to hold that as support, you can see it broke above it on the 9th and then couldn't hold it as a follow-through day on the 10th. So now it's going to have to gather itself and break back above that 60 level, which I do think it will do, but it may take a little time. Might need to be a little patient on that one. Checkpoint, we'll cover that one Thursday in detail. TBT. So it just continues to run. the vertical stuff works even for these treasury ETFs. So when I'm talking about, I don't like it when things go vertical. That goes for this too. This is too vertical, especially for something that reflects interest rates. Oh, with what Chairman Powell said today, I would be really surprised if they don't come out and attack trying to drop rates down. Be very surprised if they didn't. And look what we have there. We have a extended C wave, 161.8% extension. So it's already past 100% of this really nice, well-formed zigzag. So it looks good there. Ken, if you're listening, we talked about this and you said to look at it, and man, it was spot on. It moved up there. You were right up to that 161.8% level. And now we'll see what happens, because it's too vertical. It's hit an extended level. This needs to rest. Whether or not it has anything to do with the ADX is still underneath the positive directional indicator, but it's broken above 40. All indications are this is out of steam. This one's running out of gas. Now the question becomes, how's the consolidation? See, we're overbought with the 10-day moving average too. So every signal is showing that this is overbought. Does it consolidate sideways? Does it come back down and test this level? If my, I shouldn't say assumption, but if my view into the future is correct, that the Federal Reserve is going to try to knock rates down just a little bit, just to slow and calm this down some, it could at least test that 100% extension, if not come all the way back down to the 61.8. And but that's just speculation on my part. I don't have any news that backs that up. Just past history of how they act and the way they think, and the comments that were made today from Chairman Powell. I'd just be shocked if this continues higher from here. But it was a nice move to that point. Howard, you are 100% correct. So let me read this to everybody, because it's a really good question slash statement. Howard says, look at TBT, which we just did. Understand its indication of interest rates. It moved up a fair bit. Yes, it sure has. High rates equals not so good for stocks. Is that a fair reflection? Yeah, especially tech stocks, which is why the high tech stocks have sold off a bit. So that's an extremely fair reflection. Been why the market has struggled a bit with interest rates going up. So then if the thesis that, hey, interest rates need to rest for a while, possibly even correct back down, could be a period where the equities, especially the big tech stuff that's been hammered, been so out of favor over the last couple of weeks, can renew and have another run. So we'll see if those two play hand in hand. On the SPY, the zero line, Craig, I'm not 100% following you with what, I'm not sure when you asked that. And, that's the thing about asking questions while I'm chatting. Steve asked, what's the best way to study the bond market? That's a really good question. There's a lot of good information out there on the correlation between bonds and stocks, and the relationship between how those work, understanding the difference between how the Federal Reserve acts to the Treasury with the balance sheet, all those aspects in there. I'll between now and next week, I'll come up with I've got all kinds of books in a box in the garage that I used back when people read books and weren't on the internet, and I'll find some good informational material for you. Just not sure of the names off the top of my head, but there's a lot of stuff that I used back in the day, what a terrible expression, to study. But that's a really good question, and I'm glad you're interested in learning more about it. AMD. We'll see if it can hold itself. Man, at this point in time, it is oversold. You can see with this move. But remember, we've been talking about AMD for a while now. You guys ask about this every single week. Somebody does. And everything changed when Intel changed their CEO. That was when the sea change occurred. It's been nothing but a set of lower highs. We've been talking about this every week, and it just, that stopped the momentum of AMD, and people started taking a look back at Intel. Now, again, tech sector's had a rough go over the past week anyway, so likely we'll get some sort of a move back up. But the thing that would concern me with AMD right now is it needs to get back above 85 like tomorrow. The longer it stays below there, the greater the chance is that it's coming to 75. So if it can't recapture 85 like in the next day or two, you're probably looking at 75. Now, if interest rates do change quickly, then that may be able to happen. But that's what's going on with AMD. The whole Intel thing, they were eating their lunch and they had all the momentum. And then that one announcement changed everything. Anton, that's a good question about short to medium term expectations for technology, health and genome. I'll save that for a SPY market update topic. I've already got what I'm going to say in the next one, but that's a really good question, and I'll make a note of that and cover that in the next update. So tech and health, I mean, that's some of the things that we talked about to start the year, so I can bring that in again. It's like I hear the thunder in the background there, like I'm about to get yelled at here. Beyond Meat and NGA, Sue will cover those on Thursday night, if that's okay. NGA has been, Beyond Meat has got an earnings report coming up. That's why we have a spread there. But with NGA, you can see that was a pretty significant move to the downside there. And they've taken all the juice out of the premiums. So now we need another move. Now, the way we'll handle this one, and I'll talk more about this Thursday night, is when it comes, if it comes down again, then we're great, we're good, we're out, we're done. If it starts to bounce back up from here, we'll sell the puts and hold the calls. And that'll be the way to manage this one. So it's pretty simple stuff. Craig, Apple is one I really did want to talk about because I think Apple is looking, in fact, that may very well go out as an alert to our subscribers tomorrow on Apple. So you can see this move down here where it held on the wave 4. So we finally labeled the wave 4. We have the wave 5 target up here. The DMI isn't looking so good with that negative directional indicator. Remember, I don't pay that much attention to the DMI on downward stuff. I look at the DMI for upward movements. So don't worry about that too much. I just brought it up because if you looked at it and like, I don't understand, it kind of, when there's a downward move, I haven't found it to be as accurate as it is on upward moves. So you can clearly see here that Apple is way oversold. So it's already, one of the cheapest stocks from a fundamental standpoint, PE ratio, et cetera. And so this is going to be a good one to finish on because we're at 10:15 now, and I swore I wasn't going to do this, but I know you guys enjoy this part, and I really like looking at the charts with you. But Apple's a great suggestion, and as I said, very likely going out, barring some sort of a massive open to the upside in the morning. It's likely going out as an alert to our subscribers tomorrow because you just don't get an opportunity to buy Apple this oversold very often. And if I'm right on interest rates, the tech that has been smashed, and a lot of the big tech stocks have charts that look just like this, are going to rebound. And so let's see if that plays out and Apple makes its expected run back up towards 150. I think it's a great chart. I'm glad you asked for that one. So we'll wrap things up on that. Thanks again for your attention. As always, I mentioned, man, I think we got a couple fun months coming up. Come along with us. It's going to be a great time. I don't necessarily think it's the big down move yet. It could be, but I'm not so sure about that yet. But I do know that we're going to be in that volatile period, the width of that expanding triangle. That's fun time. Volatility. That's what we want as options traders. Thanks again for your attention. Have a wonderful week. We'll see you next week.